Okay, since the majority of the students join, then I will start the session, which is the discussion of the pre-scene for December 2024 SL3 examination. Then you can see this is your company, which is in the logistics sector, which is Ecom Logistics PLC. It's been a quoted public company. Then the details given in the pre-seen document which was issued, and for the unseen, then you all have different type of the scenarios. Definitely there is a 30 marks tax resident company tax computation question. Then besides that, another 20 marks totally into 50 marks question is there as your section 2, question 3 of the paper. Okay. Then what I'm doing based on the given pre-scene, then available information I need to analyze on the tax perspective of the entire common pre-scene. Then this is the PowerPoint presentation which it has prepared for you all. Again, the original pre-scene is there. When it's needed at the ad hoc basis, I'm coming to this common pre-scene which is issued, and the relevant parts I need to discuss in here. That's how the discussion is going forward. Then let me start with this discussion, and if you have any questions, you all can ask. And again, you all can put into the chat box, but please let me complete the session for the nearly by 2.5 hours or 2 hours. Then after that, whatever the questions, I'm available for you to answer. Therefore, a kind request, be patient for this discussion time. And meanwhile, any questions you all can put into the chat box, no worries. But when asking the question, when I'm doing the session, humble request, then at that time, if you really need to interrupt me, it doesn't matter. But it's I'm more comfortable if you all can ask the questions after the session. Okay. Then I'll start. This is the overview of the company. In the pre-scene document, we have 2 companies. Then all these companies subject to be tested at the examination. And again, when it comes to overall information, we need to look at on Ecom Logistics PLC, ELP, and under the discussion of this company as the associate company of ELP, we had Ocean Shipping Line Private Limited. Then I'll come to that one with this discussion, not separately, because I need to link, because these are the 2 companies, because ELP has acquired 26% of the shares of Ocean, which is the Ocean Shipping Line Private Limited. Then therefore it's in this. Then in the same kind of the industry, like a small peer company. Then therefore I thought it's good to take these 2 companies together under this discussion, and I will do that part. Okay, not separating what I need to tell. Then this is the overview of the company. You can see these are the real models which we can see in Sri Lanka. And here, now come to company overview. In the overview of the company, which in the overview of the company, then first thing, name of the company is Ecom Logistics PLC, which is ELP. I'm using here after the wording of the ELP for the further discussions. Now, please keep in mind, this is not the way they have commenced in 1993. It was a private limited company with the 2 shareholders being friends. And after that, in 2015, it has went for first, which is the initial public offering, and after that only, this became as the PLC. Then therefore, it's that particular history of the coming from the private limited, all these things I'm not going to touch. Then here, the name of the company, ELP, nature of the business or principal business activities. This is a diversified company. Being a diversified company in the same logistics sector, they are doing different kind of activities. Then therefore, we need to analyze what are those activities, and for the tax angle, what is the tax treatment or a chargeability of the income tax, chargeability of the VAT, and now in this paper, commonly testing social security contribution levy, SSCL, and how this, at least for this main income categories, how the SSCL chargeability will be applicable. Sorry for this cough and all. And here, in these are the main revenue lines of this company. A diversified company operates in various sectors, including freight forwarding, in air and sea, and domestic transportation. We don't know what is that. It's probably transportation of goods, not passengers. Then warehousing, they have world-class state-art warehouses. And that was one of the objective of the IPO, to collect money for this, go for the vehicle fleet and the warehousing. And customs clearance, house agent services, and the packing and moving. All these things are in the page number 5 of the original pre-read. As much as possible, that particular details I match with this. Okay. Date of incorporation 1993, which is in page 3. Date of listing 2015, which is in page 3. Okay. This is the initial information, but now I need to come for the shareholding structure. Then this is the, under the company overview, this is the shareholding structure before and after listing. Here, in that, Mr. Roshan and Mr. Kamal, this is ownership before listing. It's 50% and 50%. Then subsequently, they have go for IPO. Afterwards, what has happened for initial shareholders, that stake, it has diluted and then it passed to the public. Then Ajanta de Silva, it's 8% and the public 32%. Which, why I have divided this two, this is the reason. In the pre-seen document, this is the paragraph it has given, this share ownership structure. In that, it's given for public, it's 40%. However, it is in next paragraph, it has given Ajanta de Silva, one of Roshan's best friends, brought 8% of the shares. Now, among this public, I know one person. And that person's shareholding percentage, that's why it has separately taken. For me to go for the link between this OSL and the LP. Okay. Then here, it's very clearly given from the market at rupees 15 per share to join as an executive director. He has bought the shares. He has bought from the market. Then from the publicly available shares, from the public who has purchased these shares, then Mr. Ajanta purchased again. Then since this information very known to me under pre-seen, that's why this analysis has done. Okay. Then Ajanta de Silva 8%, public 32%, because this link I need for different angles of the taxation. Then here, which is it's a total, it's 100%. It's total 100%. Now the number of shares, it's a 500 million. It's given in pre-seen. Value of the stated capital, if you have look at your financial statements in the financial position, then it's given, and the value per share, rupees 100, it's very clearly given what's the value of the IPO. Then it's rupees, it's at the 10, then that's how the value has been taken. Okay. Then I need to come for next one, which is the associated company. How it became as associate, it's like this. Then this is details of associated company, which is OSL, which is the Ocean Shipping Line Private Limited. The both very lesser details of the OSL and very which is in the descriptive explanations for the e-com, it's given, but in both companies, financial statements have been provided. Then therefore, we have to look at in commonly how those things are applicable. Then nature of principal business activity. It is a non-vessel operating common carrier. Then NVOCC, which is they don't have vessel. The company performs all the services of a carrier, but does not own vessels. They don't have vessels. They are not a company which is the owner or charter of the vessels. But they are doing all the activities which may be documentation, which is on the clearance, on dealing with the customs, and all these activities they are doing. But they are not a vessel company. They don't have a vessel. Then if you have this company and again this company, more or less they are in the same line of the business. Then but in e-com they have diversified, but for them they are in the industry of the non-vessel operating common carrier company. Then current shareholding structure. This is a private limited company. Then, as per the preceding information currently available, these are the shareholding structure. What it has given, Ajanta De Silva, which is the executive director of ELP now, he has already purchased. His habit is investing. It's given in here, which is he was a university batchmate of Roshan, that's the link. Ajanta has invested in several private and public companies and holds directorship of those companies. He holds 24% of shares of Ocean Shipping Line Private Limited. Then after that, the details of the company. Then therefore, Ajanta De Silva being individual shareholder 24% and Ecom Logistics PLC 26%. Again, it's given in the same paragraph, which is the ELP acquiring a significant stake of OSL. That is the intention. And don't forget, in this, the co-founder of this Ecom, his intentions of the investments are given. Then here, Roshan saw an opportunity to excel in his the ambition to add new ventures and accelerate the growth of ELP by acquiring a significant stake of OSL. Now you have to ask a question from you. Did ELP acquire a significant component of OSL? Do they have significant portion of the shareholding of OSL? Now, Mr. Roshan's profile and his investment patterns to this OSL now is different. Now, the profile significantly he needs to acquire, but pattern of the investment, it's only 26%. Now, you have to match these things. Then, hereafter what has happened, Ajanta has involved in negotiation because he been a shareholder of this company and helped to hold ELP, the company, to acquire 26% of the OSL in 2020. Now, this is the position. Then we are good on this shareholding structure now. Then it's a 26%. Now there are 4 family members. The brothers, which 2 brothers are not in line with the performance of the company, and they have some which is struggling for performances. Then therefore, however, for time being, there are 4 family members, then 4 equal shares apportioned to each of them. Then it's 12.5, 12.5, 12.5, 12.5, altogether 50%. That's how this company, OSL, the shareholding structure has aligned according to each shareholder's shareholding percentages. Okay. Then can this be changed? That's questionable. Can it be changed? We don't know. We have to look at and we have to be prepared if it is changed. What are the questions? Then it can be happening in your unseen. It's not can, it may be. Then values of total stated capital in the financial information here in the last, I think more than me, you all so much familiarized with this one. Then here in this one, which is 1,250, stated capital is there. Okay. That's how the foundation information of this company. Now I need to link, as I have informed to you in when I'm starting, then I need to link this one, Ecom and the OSL together and look at the tax perspectives. Now in tax implications on ownership, shareholding structure of OSL. It's not the shareholding structure of me being ELP, but based on the shareholding structure of OSL, what are the tax implications to the 2 companies being individuals and the quoted public company? Now come to this. The shareholding structure, one is ELP, other one is OSL. Now you know ELP has invested in OSL for the 26%. And besides that, Mr. Achanta De Silva is there. The individual shareholder, he being the shareholder of ELP plus executive director. Then there is an individual person which is in the as a key management person, or now it's a key responsible person. And the again for the OSL side, acquiring 24%. Now he is a director. Probably it's the director or the very clearly on the ownership is shareholding on the in OSL. Then this is structured. Then please look at on these under which angles in here. Are they associated persons under section 196? More than that, because this is coming through, you can see the in one or more interposed bodies, and it's in section 196 subsection 1, it's linked to the individual. Section 196 subsection 2, it's an individual and entity. An entity and entity. Then in this situation, which is that indirect components that influence in part the associated person, and more than that, when it comes to transfer pricing, we have separate gazette notification. In that gazette notification, which is 2217/7, in this gazette under regulation 8, we have the which is elaboration of associated person definitions by covering all the which is relevant relationships as the associated person for transfer pricing. Then therefore, now you can see the overall picture here. By looking at that, what can be tax perspectives? One is a transfer pricing. Now, these 2 companies, these are the in-resident companies. Then it's a more or less, firstly, it's a domestic transfer pricing under Section 77 applicable. On the other hand, if I'm putting the word if the shareholding structure has changed, I'm in here. Can this be changed? I'm in OSL. If this has changed, there may be in between, there are normally in related party, associated persons, there are transactions in between associated persons. Then, but there is a conditions how it should be associated. Under that, if it is associated, then the asset transferred in between associated person, then Section 46 application. And next one, subsequently may be changing of control under Section 64. It's subsequently. All other than transfer pricing, all I'm going as if. Because there is a reason for that if. Then subsequently may be changing of control based on the preceding information under Section 64. This is the helicopter view of the shareholding structure for you to look at on the tax angle. Okay? Not the econ, but for OSL. Then to next one, which is the here ELP, which is the Ecom Logistics PLC tax perspectives. Even it's for the ELP, I have addressed to the both companies, which I have put into the ELP because both companies are in the same line. Then for the OSL, I'm not going to take. Now come to this, whatever the company in the prevailing tax laws, you have to look at these things, the income tax, VAT, and the SSCL. The SSCL, then please go through. It's in your business level, BS7. In the syllabus, it has included. Then your pillar for SL3 is a tax and law pillar. Therefore, this can be tested. Even in the last time paper tested, previous tested. Therefore, please go through. I think you all, which is done the past papers, please do the past papers because it is a critical success factor for you to pass your examination. Then therefore, in the even past papers, you can see the importance of this social security contribution levy, which was introduced in 2022, it's October. Then here, these three taxes, income tax, the Inland Revenue Act number, which is main enactment, then Act number 24 of 2017 and up to the 8th September Amendment 2023. And relevant gazette notifications. In the concern of the gazette notifications, then you all know, even for the VAT, the relevant main enactment and the subsequent amendments, then and relevant gazette notifications. Then for this gazette notifications, you all can print and you have to certify from the education division to you to bring those gazette notifications for the examination. Then for additional points also, I need to communicate. Then here, next one, SSCL, this is the main enactment and these are the amendments. Please, at least in the main enactment, go for the exemptions and please look at, we have exempted services and accepted articles. Then in that, please again go through how on different business, which is in the different revenue types, how the SSCL will be applicable, those things, please go through the basic idea you should have. Then these are even we are discussing this SSCL part, not the open book referential material. You cannot bring those to your examination, but 1 and 2, of course, yes. Okay. Then these three. I'm analyzing these three totally for these two companies. This is the next part of the discussion what we are doing. And now come to purely on the income tax. Then it's Inland Revenue Act number 24 of 2017 and amendments, the applicable tax rate. And quickly go through these things. And tax rates on taxable income, including gain from realization of an investment asset, is 30%. Now it is steady, it's 30. For this logistics sector, when it comes to the exemptions, then which is on logistics sector, especially no exemptions, but indirect exemptions we can take looking on the industry. Then therefore I'll come to that later. Then here it's a 30%. Now not only the taxable income, but under taxable income, we have that non-final withholding payments and the final withholding payments. The final withholding payments are not form part of the taxable income. Then I have addressed those things separately. The AIT, Advanced Income Tax, or a withholding tax application of each sources of income. Come to this, which is on dividend income or distribution of dividends. I can receive dividend income from my investments in other companies, as well as the dividend I can be in a PLC, then I can distribute dividends to my shareholders. Then under that context, what is the application of the AIT? It's a 15%, it's a final withholding payment. This is there. And very clearly it has mentioned on dividend distributed out of profit. This 15% AIT is applicable on the dividend distributed out of profit. Then, but there are exemptions on dividends. Then dividend exemption is the one is under third schedule, which is the dividend distributed out of dividend income, it is exempted. And again, it's under third schedule, para triple law, it's given separate industries. Under that, on separate industries, if we have invested particular period given, under that, if we have invested, then the dividend income is exempted. Then these are the two exemptions, which is on dividends. Then therefore, which is we need to look at what is the way of distribution of the dividend. For that, the eye opener, this has included. And the second one on interest income anyway, compulsory 5% of the WHT is applicable, or AIT applicable. This is not a final withholding payment, okay? This is not a final withholding payment. Then, okay, this is not a final withholding payment. What the students forget at the examination, with everything, it's a time pressure and you have to write, think, and lot of things. Then therefore, what is happening, you maybe forget to take the tax credit, 5%. Therefore, when you are doing the adjustments, steadily if there is a fixed deposit interest income, then you know it's an investment income, you have to remove it from the PBT and you have to take it on investment income in the gross part and quickly take it in the tax computation and take the tax credit and conclude them. That is there, which is the on interest income for schedule para 10, 5% of WHT or AIT, not a final withholding payment other than for secondary market instruments, is treasury bills, treasury bonds, no withholding tax, no AIT is applicable. Then other than that, for fixed deposit savings, all these things in the LKR, other than which is the exemptions, I'm not going to touch all the exemptions. Then mindful to consider tax credit. It's a taxable at 30% under taxable income, but take the 5% of the tax credit. And this is on next one. In the other income, maybe rent income. On rent income, which is on explanation, I'll come to in the tax computation adjustments part. Then here under first schedule para 10 is a 10%. 10% on what? It is on the subject to conditions of monthly rent shall be exceeds rupees 100,000 and that particular asset, it should be given to the movable or immovable property. We shall give it to for the purpose to conduct a business. That means it should be given for the business purpose, not from my perspective. The tenant or a person who is using the asset. Then if it is so, then which is a 10% WHT or advanced income tax, it is applicable. Mindful to consider tax credit again, liable at 30% under taxable income, even investment income, even business income. If it is the effectively connected to the business, you have to recognize it under business income. If it is not effectively connected to the business, but it is investment income, you have to take it under investment income. Okay? Then it's on the rent and this one. This one, which is being a logistics sector, then this is normally a payment for the international agents. We cannot do the logistic industry being isolated to Sri Lanka. Then we should have the connection with the international agent, the countries, the foreign countries. Then because it's a sea and the which is on the air freight, and we should have the link between those foreign countries and the agents, cargoes, ports, then all these things. Then therefore, if we for any reason, if we have to pay payment to that non-resident persons, then this is not non-resident taxation, but for the payment of the non-resident person, for the reasoning of the land, sea, or air transportation, it's applicable AIT or income tax is a 2%, which is governed by the Section 85, subsection 2B. And again, it's supplementary support by the Gazette notification on the withholding tax on service fee. Okay? Then this is that part. The rate of 2% is prescribed for the purpose of paragraph B of subsection 2 of Section 85 of the Act. When a resident person makes a payment to non-resident person, for what? It is for the withholding tax is applicable under Section 73, para HOI, which is for the land, sea, or air transportation or communication, telecommunication services, but in telecommunication not applicable for this. What is Section 73? It's the sources of payment to whom? Non-resident person. Okay? Then this is next point, which is being basically in the patrical application logistics sector, this can be happen. Okay? But all these, its analysis based on the pre-seen, don't totally, which is depend on these. What you have to do at the examination, you have to read your unseen very carefully and you have to apply those. That's why this is given all about subject to unseen information. Okay? Then come to next one, which is in the income tax, based on the model of the network and the industry, there may be exemptions applicable on business income. Then what are the exemptions? One is on the service income. Other one is the foreign source. These are the two, which is very commonly applicable to even last time it has tested. And normally if you have look at the past papers, this patrical application of these two, it has tested. Then therefore, don't take a chance. Please go through these areas. Be in your mind. Whereas the situation, if it is there, please read and apply accordingly. Then here, third schedule para U, Roman 3 and Roman 4, the third schedule for the exemptions. Then in that, on service income, any service rendered in or outside Sri Lanka to any person to be utilized outside Sri Lanka and income received in foreign currency to the bank in Sri Lanka. Then it is for the service income. And other than service income, in next one, the third schedule, para U, subparagraph 4, it's talking about the foreign source. Service income had a foreign source. Other than the service income, the foreign source. Then here, any foreign source other than the service income, where such gains and profits are earned or derived in foreign currency and remitted through a bank to Sri Lanka on or after 1st January 2020, such part of the gain and profit are exempted from income tax. For instance, if I have invested in foreign company, then dividend income, there may be the capital gains and any other foreign source. And when it comes to service income, any service income which within our business which we can provide. Okay, then this is again for you to be a more wide thinking on your pre-seen information. Then a special note all about subject to unseen information. This is just for you to tell now, okay, in that there are these two common exemptions which you all can plug where it is necessary. Okay, this is on that. Then the next one, application of VAT. Application of VAT for the each type of the revenue lines. Then here, being a logistics sector, what is this company's main income? It's very clearly given. It's a freight forwarding income. And they are engaging in what? If you have look at the information of the pre-seen, they have separate SBUs for the business. In such SBUs, very clearly it has given the key SBU is the freight forwarding. Not only that, in income, the freight forwarding export in that air and sea we have. And freight forwarding is a logistics service that involves the coordination and management of the transportation and shipping of goods on behalf of shippers. Then, what is on behalf of me, this is my main business activity. And when it comes to this one, which is I need to come for this diversified business, then this one. In page 5, as diversified company, ELP operates in various sectors, including freight forwarding, air and sea, the domestic transportation, warehousing with modern facilities for storing, import and export cargo, customs clearance house agent service, and packaging and moving, which is the personal effects. These are the, being a diversified company, these are the particularly the applicable revenue streams of this company. Then for this two paragraph, I need to link for the law, which is the application of VAT. In that, application of VAT on EPL, because for other parties, providing of any non-vessel, without vessel, providing of any other courier services. Then different kind of the supply, we need to look at the application of the VAT. Freight forward in air and sea, this is zero rated supply under section 7. How it's become a zero rated supply? In section 7, we have a separate part for what? For the international transportation. International transportation, in that, what should be the international transportation? It has given through what? Extraordinary gazette notification. Then in that gazette notification, let me come to this one. In that gazette notification, this is the gazette, which is open book referential material for you all. Then here, the relevant, any relevant business on the international transportation, it has included here for the zero rate. Then quickly come to this one. The services directly connected with international transportation provided by airlines. It's not relevant for me. I'm not an airline. Services directly connected with international transportation by shipping line. The services provided by the airport and aviation services, Sri Lanka, in related to these things? No. Services fall in under following sections of the Sri Lanka Port Authority tariff? No. Services provided by Department of Customs? No. Services provided by General Sales Agent? To international transportation? No. Services provided to any airline agent? Now come to 8. services provided by freight forwarders, agents, or their local representatives who are registered with the Central Bank of Sri Lanka. Now, mindful, this is a quoted public company. Then all the regulation compliance requirement, it should be there. Sri Lanka, under the provisions of the Exchange Control Act, facilitating international transportation, and where such services are evidenced by a document of carriage covered by a freight forwarder's all risk legal liability insurance policy issued in favor of the local freight forwarder, which is zero rate. Now, this is the link to VAT. Now come to this one. The freight forwarding air and sea, then it is the prescribing from the Gazette, and therefore it is 0%. All the details it has, which I have explained, it is here. And the domestic transportation, it's probably goods, it's liable for VAT. This is the exemption for VAT. Now, you may think it's a liable for VAT. If it is so, why this exemption? Look at the exemption. Then, public passenger transport services exempted. Other than air transport, water transport, or transport of tourists, exclusion of tours and taxi services. Other than, then here, passenger transport, which is exempted. Now, make here transportation exempt, but air transport and the water, those things, if it is categorized under international transportation, it's liable, but under the rate of 0 rate. Okay. Then next one, the warehousing. They are having warehousing. Now, based on the information provided, I don't know, it may be liable, may not be liable. Then we need to look at based on the unseen information, but it's given for it's warehouses in Sri Lanka. Then they are renting their spaces. They are using the spaces for them as well as they are renting the spaces. Then therefore, again, can we apply on this income the 0%? Now, I need to again come to this Gazette, and here, which is, we have stopped from 8, and inland depot services to shipping lines engaged in international transportation. It's not again for us. And when it comes to this point number 10, 11, 12, 13, 14, 15, 16, 17, then all these things, by that shipping line, which is on OSL, they can do. They can do, and the same application is there for them if those things are there. Then in the point number 18, I need to come in the Gazette. Cargo logistics and warehousing services provided in relation to international transportation of goods by any global logistics center, which is subject to monitoring by the Customs Department and maintaining documents, evidence the international transportation of goods and receiving payment in foreign currency for such services. That's why I have mentioned it's given warehousing income. Then I don't know how they are going to provide them, but for sure they have their own warehouses. Then on that they are dealing with the renting and which is storing of the goods of the customers. Now here you can see, which is on the initial public offering in this. In 2015, the Board of Directors of ELPL discussed it's on private limited at that time, discussed the future of the industry and the company strategic plan, considering the company's steady and sustainable growth. The Board of Directors to expand the business by acquiring its own transport field and modernizing its warehouse to world-class standards, which could be rented out to others. Then there should be another income, there should be rental income then, which is effectively connected to the business. I'll come to that later. Then in here, anyway, the warehousing income is there. How it's linked with the internationally, then it's a question. But for the sake of you, it has included, and it may be zero rated, maybe liable. Then here, customs clearance house agent services based on the common activities included, what they are doing, documentation preparation, compliance assistant, tariff classification, communication with customs authorities, cargo, inspection, coordination, logistics. For these services, it's liable for VAT if it is not included under that international transportation categories. Then packaging and moving anyway, it is liable for VAT only based on pre-seen information, because in the pre-seen, not much information given who are the suppliers, how they are doing, nothing. Then, therefore, this is analysis for VAT. Special note, you basically know these things and go. But you have to, with the mindful, you have to read the unseen information before just applying these areas. Okay? Then next one, SSCL. Again, SSCL for the both companies. Then here, application of SSCL on EPL, different kind of the supply, but through that, the application to OSL also there. Then for the same income sources, freight forwarding AINC, it is exempted. What's exempted? Services of a freight forwarder and a shipping agent license under the licensing of shipping agents, freight forwarders, non-vessel operating common carriers. Now you can see the link, the OSL, and for the EPL board, SSCL exempted. And Container Operation Act then, which is the courier services, is so far as such services are in respect of the exporter of any article. Now you can see in my revenue, it's given export, which is on the air and sea both given. Articles from Sri Lanka exempted from SSCL as per the part 2, which is exempted or exempted services of the SSCL Act. Then the domestic transportation. We have two kind of the transportation. One is the transportation of passengers and the goods. In here, in SSCL, transportation of goods and passengers exempted from SSCL as per the part 2 exempted services in the SSCL Act. Okay? Then warehousing, based on the information provided in pre-seen, it's liable, no exemption. Custom clearance housing agent services, it's also liable for SSCL, no exemptions given. Then packaging and moving, which is again liable for SSCL as per pre-seen, and common now for this 1, 2, 3, 4, 5. These are the 5 revenue streams, but in SSCL, like that income tax, like in a commonly applicable zero-rated supplies, zero-rated services under Section 7, in SSCL, the common exemption is there for the service income. What is that? Common exemption on services. Any service rendered in or outside Sri Lanka to any person or partnership outside Sri Lanka for the utilization of all these provisions, the utilization should be outside. The person who is utilizing the benefit should be outside Sri Lanka for a payment in foreign currency. If such foreign currency is remitted to Sri Lanka through the bank, it is exempted in SSCL. VAT, it's a zero rated under Section 7. Income tax, the same thing, it is exempted. SSCL also, it's exempted. Knowing this common provisions, you all can apply as and when it is needed in your unseen. Okay? Then here again, all above based on pre-seen information, then subject to unseen. Subject to unseen. Then these are the 3 critical analyses of the application of the direct tax and the indirect taxes. I think it's clear. Then come to this, the possible issues. Possible, no? not shall or it's must. The possible issues based on the present information. Now you can see in the present when it comes to for tax, then it is exactly, it has not given this is for tax, this like this, no, nothing. Then therefore, we have to look at the situation in the present and then only we have to apply to the context of the law. In here, which is tax implications on finance and business strategies of Mr. Roshan. Now we have a co-founder, then being a co-founder, give me 1 minute. Okay, we have two founders actually, initial two shareholders. In that, Mr. Roshan, what is his strategic business perspective? Then that is, what is the business strategy of the founder, one of the founders? Then Roshan saw an opportunity to excel in his ambition to add new ventures. He has in his mind to add new ventures to the EPL and accelerate the growth of it's ELP by acquiring a significant stake of OSL. Now, this is the intention, and in our current position, it's with the 26%. Now, we have a fundamental question, is it a significant stake? Significant means material. If something to be material, not in the governance or not in the audit, if something to be material to that, I should have to have influence on that. Then in here, in the stake. To influence, then it's a 50% or more. It's a normal, which is in the common sense idea. Now the question, we don't have that. Now, with that intention, come to the balance part, which is did ELP acquire significant stake in OSL? My answer is no. Then, what are the tax implications? What are the tax implications on if there is change of control? The application of the section 64. I know you all very much familiarized with this particular section, which is the change of control. Then let me come to first this theory area and take 1 minute on it. I'm not wasting on the time on theories. Then here, section 64, what it has mentioned, when the underlying ownership of an entity, it changes by more than 50% as compared to the last at any given time in previous 3 years, then they cannot claim the carried forward finance cost. They cannot claim the carried forward business losses. They cannot claim that on the long-term contracts, but they have, which is if there is written backs or something, and which is on the carried back losses. And in the reversal of amount, we have to reverse the amount within 3 years as per the act, but those parts are not eligible for them to do. But there is a silver line. What's the silver line? Which is even after the acquisition or the change of control, if which is continue with the same business activity they have already done earlier, at least for the 2 years period, then none of the conditions not applicable. Then which is on the, we can, normally this 2 is coming, which is practically more or less its application is with the business loss. And the next one, which is the carried forward finance cost. Then why this is applicable for me being ELP and the ELP and the OSL. Here we go for this one. This is the reason. Before that, let me come to this for you to analyze the reason from the original document. Come to the second paragraph. However, OSL's performance turned out to be poor and Roshan was not happy with his investment. Since he was only non-executive director, he could not question and suggest and did not have the right to be involved in day-to-day operations. 4 family members equally on 50%, that's why 12.5, 12.5 into 4. Then of OSL and 2 of them had a conflict with the other 2 brothers about the performance of the company. They were willing to sell their shares to Roshan if he offered a good price. Again, if the contingent is there. Although OSL is currently performing poorly, if managed properly, it can be turned around as the future of the NVOCC industry is bright, which is on the non-vessel operating common carrier company. This is the current situation. This total information leads to one perspective. So, sorry, not one, 2 perspectives. Mainly, it's the changing of the shareholding structure. That's the main thing. How it's going to be changed, then it may be the very, which we can analyze. These 2 brothers, which own 12.5 to 12.5, 25% stake. If Mr. Roshan offered a good price, they can transfer it to Mr. Roshan. Mr. Roshan, he can buy shares personally or under the umbrella of the ELP. Now, still now for the currently, since we have it's in the under the umbrella of ELP, probably it's again can be purchased through the ELP, but in unseen, it may be to Mr. Roshan or make a vendor pula, no vendor pula. Can be happen or may not be. Then there's a one angle. The second angle, Mr. Roshan, he is now currently, he holds the shares in the 26%. Due to this poor performance, he can sell the shares. That's the next thing. Now with all, we need to look at the tax implication. Then here, I have taken first one. What is the tax implication if there is a change in of control? Okay, change in of control. I'm not aiming of totally on section 64, but how the share structure going to be changed. Then this section, which we have mentioned in earlier, if the same business line is continuing, then it at least for the 2 years after changing of the control, then we can claim that business loss and finance cost. Now come to this purple color part. How to answer? You have to apply the scenario. Information provided in the unseen, apply the section 64 requirement. Now I need to put a full stop for these and come to this one, 5.4. Application to pre-seen information. Now I have a question, why this section 64? All this theory area elaborated, why? The reason is, what is existing ownership with ELP, 26%. Proposed disposal by 2 individual shareholders, 25%, 25%, sorry, 12.5% each. Total stake, if shares purchased by ELP, it's 51%. Now look at, it is compatible with this and entity changes by more than 50% compared to the ownership of the previous 3 years. Now it's going to be changed 51 if this happens. However, if the shares acquired by Mr. Roshan, then methanani ELP. In here, we are discussing on ELP. In any case, if Mr. Roshan acquired, this is not applicable. It's the individual is there. It's individual is there, but through the individual, indirectly applicable, but not indirectly. And the tax implication on this. What is the tax implication? Now, from it's a section 64 for the OSL, if the changing of the control. Now, what is the implication for the individual shareholders? These two brothers. They are receiving money. Money for what? For shares. Shares are what? Shares are capital assets. Capital assets of what? Capital assets held for investment. Then in that, the shares, if there is a gain, obviously gain, then it's subject to what tax? Capital gain tax. It being for individuals, what's the tax rate? It's a 10%. Now come to this. Is it liable? Yes. Why liable? This is what shares? Privately equated shares. If it is a quoted public company shares, it is exempted. Now come to this one quickly. Then, which is what are the tax implications for persons who dispose the shares, the two individuals? Tax implication, individual income tax. View of the shareholder of each acquiring. Disposing of private equity shares liable for income tax at the rate of the 10%. It's for individuals. It's clearly for individuals at the rate of 10% under capital gain. How to compute gain? The same manner, covering under section 37, 38 and the transitional provision on determining of the cost, which is section 203. Then we need to look at what is the cost of the shares, what's the year it has established. Then if it is the 30th September 2017 is my parameter. Before that, then we need to go for the valuation and take the share value. And in the consideration, we need to take the consideration, and there may be an assessed value, but it's very randomly for the private limited companies. Anyway, we have to take the value assessed and we have to take then the cost and consideration. If there is a gain is subject to 10% for this individual shareholders. On the other way around, if that Mr. Roshan sell the shares of this OSL to another party, maybe Mr. Ajanta, then in that, again, person who is subject to this everything is Mr. Roshan. Okay? Then, at the two angles, it's a change in of the shareholding structure. If that one thing, two brothers can sell the shares to the LP or Mr. Roshan, then or else due to the poor performance, Mr. Roshan can sell the shares. Something. Okay? No VAT and SSCL implication on this. Then, which is the additional note, however, disposal of listed shares exempted. Then next one, if EPL sell the shares to OSL, then that's mean if the company, which is now 26% stake is there, if they can sell the shares of OSL to the particularly in the which company can sell the shares of 26% stake to other party. Now again, it's a company. It's a company, then not the individual. It came under that Mr. Roshan's part, but it's in the EPL stake. Then if it is so, EPL is getting money out of the disposal of shares. Then under that disposal of shares, they are subject to capital gain tax under same computation part at the rate of the 30%. Then for the two individuals, Mr. Roshan and the company, in the different way it can be happened. Then you should have to have this common knowledge on this application. That's why taking all it has with the theory and all it has explained. This is that only based on shareholding structure and based on this pre-seen information. And next one, which is the tax implication, again, on Mr. Roshan's perspective, the application of the investment incentives. Nowhere in the pre-scene it has mentioned that they are going for expansion strategies and they are going for new undertakings, nothing. Even in the recent board meeting, that discussion, it has mentioned they need to look deeper what has happened to their company and how they are getting rid of this lower performance. It's in the gross profit has reduced, there are some issues, internal control weaknesses are there, and for like these things and the financial statements, it's somewhat its auditor has mentioned the application of the the recording of the expenses are incorrect. Then there are some internal issues. Then therefore, how to get rid of these things is the main objective of them, even at the recent board meeting which they have discussed. No, in any case, this new undertakings, everything it has not provided. But it's better to remember in unseen anything can be changed. Therefore, I'm again linked to now. I should have a base to link now. Then therefore it has taken the view of the Mr. Roshan again here. Tax implications on expansion, investing in new undertakings, strategies, finance and business. Then here, which is Roshan's one opportunity to excel in his ambition. This is his ambition to add new ventures. Then it can be expansion, it can be new undertakings. Then if it is so, we have to apply only a second schedule. Now the sixth schedule, it was abolished from your year of assessment, which is 23-24, is the last year. For the future, investment, which is on the enhanced capital allowances, you cannot use the sixth schedule. But it's still for sure we can use the second schedule. In second schedule, we can divide that into two. One is for the expansion of the business. Yes, now we can apply that. Second one is a new undertaking. Subject to that particular conditions, it should be invest in Sri Lanka. And in the new undertaking, it should be a new undertaking. Investing on the depreciable asset other than intangible asset, like that. In the context of the expansion, it should be a BOI company. And if they don't invest that money in a 1 year itself, then they can go for another 3. The project completion period, it has given 3 years. Within 3 years, they have to invest and complete. Like that, the theoretical angle of the second schedule can be applicable. Okay, this is just an eye-opener. I'm not going to discuss all these things. Then it's just an eye-opener. If this kind of the investment particularly thing is there, then you can go for investment incentives. And on that undertaking, you may have to analyze what implication, income tax, SSA, like that. Then anything can be happen. Then here in the second schedule, the sixth schedule, as I have mentioned, it is not applicable now. For the future tax benefits under enhanced capital allowances, not suggest. Shall not suggest, don't do that because it is not applicable now. Now means till 31st March 2024 years after that. Then why it's not? There is a period of enhanced capital allowance which is 6 years from the date of the incorporation of the date of the enactment of the act. Then that part now it was already lapsed. The second schedule, enhanced capital allowances, based on the scenario, it shall be applied. Under second schedule, subject to conditions given. There are conditions, the investment criteria, it's exceeding $3 million and going forward. Based on the province, it's different. Then, even expansion or new undertaking, investment incentive can be granted. But, additional note, if there is investment options, carefully read examiner's requirement. As always, you have to write the answers for examiner's requirement. That's why it as always. Don't write things in your mind. Please write the requirement of the examiner addressing the particular action verbs. And check the application of income tax, VAT, SSCL, or any other the application of the tax. Okay, this is again for you to give a green light for there is a provision like that, even nothing in the pre-scene, please know and go these things. Okay, it can be helpful not only for the question 3 but also for the maybe question 2. Then the next part, implication of transfer pricing. Why it's implication of transfer pricing coming? This is the reason. This is the reason. Okay. This is the reason that transfer pricing to come. But if you have look at the financial statements in financial position, then related party transactions, nothing. No related party transaction. It's an amount due from related parties or amount due to related parties not mentioned. But based on the structure given, there may be transfer pricing issues. Then here we go. Implications of transfer pricing. The highlights of ELP and OSL in the both now combined and going. Then here evaluation. There should be associated persons. Yes. This associated person is not under section 196. I'm strict to the gazette notification. In that gazette notification, which is the regulation 8. Then in that, there should be transactions in between associated person. Yes. What is this? Yes. Now for one second before I have mentioned no amount due to amount due from, but there is a profit. Associated loss, there is not the profit, actually it's a loss. Then the recording of the loss of the OSL, it's in the financial statements. Then we don't know how to compute that, how it came, and last time it is the amount is, the last time amount is 211 million, now it's 61. If it is getting bad performance, then how loss can be reduced like that? Then there are some transactions. I don't know. Then here, from below, one shall be satisfied to derive the transfer pricing, which is in the transfer pricing gazette notification in regulation 1. There is A, B, C conditions to be satisfied. Either one party exempted or other party is liable, and the different tax rates applicable for the two parties. However, that is not applicable. And for C, one party is incurring, one party has carried forward losses or loss during the year. Then in that, for me, to analyze this part, I have some information, but not in the tax perspective. In accounting, I have some information. Implication of transfer pricing, now evaluation of these two. Tax exemptions, no. Different tax rates, nothing. Brought forward business losses or loss incurred during the year by any company. As per pre-scene information, the details of tax loss has not been provided. No word. However, but it's given on the poor performance. Then, however, the poor performance of OSL has highlighted. Further, in ELP's books, there is a share of loss from the OSL. Now think, with the share of loss, then its final, which is my bottom line, is a loss. And even if we consider financial year 2023, there is accounting loss of rupees 527 million, which is I have taken profit or before tax figures taken on this consideration. You can see here, but even in finally for this year, the total comprehensive income is this loss. Then if it is accounting loss, it may be finally subject to tax loss also. That means accessible, not accessible, business loss can be happen. Okay. Then therefore, additional note, however, in unseen above information may be provided, and test on application of transfer price in domestic and international, which is section 76 and 77 plus gazette notification. This is again, which I need to tell, this time freezing that particularly to look at the tax perspective, it's open. Then the 100% of the syllabus can be subject to question, not the 100%. As much as possible areas may be in your question 3. Okay. Then the next one, which is the application of the transfer pricing issues, which is you have to look at what is the category of the transaction. Then domestic, in this case, with these two companies, is a domestic transaction, which is in section 77 and the gazette. Then you may have to, first you have to identify situation, whether there is a transfer pricing issue. To have analyzed that one, there should be a transaction in between associated person. This is step 1, the identify associated person under section 77 and gazette. Now we know it's associated person under the TP gazette. Then second step, identify the transaction which are having transfer pricing impact. Second one, evaluate transactions by identifying arm's length or non-arm's length. We cannot do that even now. Recommend the best transfer pricing method. If there are adjustments, we have to do. This is on the application of the TP. Now my mindful, last time TP, it has not tested, even the before that not tested. If not mistaken, the 2 times it has not tested. Yeah, at least for the 1 time it has not tested. Therefore, be mindful on these hot topics. And further, recommended to study on penal provisions on transfer pricing, because if there is a transfer pricing issue, even from the Department of Inner Revenue, it has found, then it's not only analyze situation and give these solutions, you need to tell the compliance issues also. Then on the compliance, what are the penal provisions applicable? Even in the gazette, it is there. The section 84 of the Act, it is there. Then transfer pricing penalties, plus please go through this section 33, 34 and 35, which is section 33 is for the, which is arrangements in between associated person. Section 34 for the income splitting, for the, which is in intentionally income is splitting to manipulate the taxes. Section 35, which is on the tax avoidance scheme. What's the beauty of this tax avoidance scheme? Tax avoidance, it is tax planning. Tax evasion is the manipulation of the tax. Then under tax avoidance scheme, if we have entered, if I have entered into the agreement with you to, in my dominant intention is to manipulate the tax, then if it is so, it's not the tax planning. Then, therefore, with this associated persons are there, then therefore it's good to look at these things and going for the examination. Okay. Then combine these areas taken, and the commonly it has taken section 46 of the Act, which is a transfer of the asset between associated person, which is in the based on the information. But please go through this one. It is again commonly tested area, even in question 2, even in question 3. Then therefore, please go through this. Directly I cannot relevant to this one because no transactions given. But it's if the shareholding has changed, if there are transactions happen, this can be applicable. Okay. Then I'm not going to touch on these. The application of the section 46. Then application of the case law provisions. These are the main categories of the case law which we have for examination in your curriculum. As the annexures, all sub-case laws are given under these topics. This is the part not included is the 2 case laws applicable on the non-resident and international taxation. Then here, why case laws are applicable? There should be a reason. Then here, key concerns on case laws. Reason for application of case law provisions. During the annual audit process, the external auditor raise concerns with the finance director regarding which is the discrepancies in the company's financial statements, which led to inaccurate in reported earnings and expenses. Next one, the external auditor will highlight the weaknesses in the financial reporting process in the management letter. However, ELP's internal control mechanisms have shown notable weaknesses. All these things, then it may be application of the recognition of the capital and revenue nature expenditure, whether expenditure incurred for the production of income or not, and we have employees within these two companies, then how it's applicable to employment income. Then we have adventure or concern in the nature of trade and the plant, but more than please go through, I'm just discussing the relevant parts to the pre-scene by looking at the given information in the pre-scene. Then you are 100% accountable to go through all the syllabus and go for the examination. Okay? Then due to these 3 points, I have highlighted these 2, 3, and 5 as the key concerns in the case law provision. Okay? Then the next one, which is the application of the case law provisions. Under that, capital and revenue nature, we have lot, but in that, when it comes to these 3 concerns, currently, Associated Portman Cement Manufacturing Limited versus Clear, Law Shipping Company, which is the capital nature expenditure, and the Odeon Associated Theatres Limited versus Jones, then all these 3 was commonly, it was in the papers. And I'm not going to look at all these case laws and what's the facts, nothing, but for you to give eye-opener, these things can be tested. And here, the next one, which is the expenses incurred in production of profit and income, we have 3, which is Haley and Company versus the Commission of Inland Revenue. Commission of Inland Revenue versus David Tappuhami litigation, even last time tested. And the Strong versus Woodfield, payment of damage, which the expense is narrowly connected or directly connected to the production of income. Then when it comes to this Haley and Company versus the Commission of Inland Revenue. What has happened in the original case, I really need to touch this little. Then it is on the, which is stolen of money, which they kept to purchase some working capitals in next day. In the Inland Revenue Act number 10 of 2006, I think none of you all studied on that. Then Act number 10 of 2006, we had the expenses and outgoings, Bahara killing. But for the Inland Revenue Act number 24 of 2017, we have only the expenses incurred for the production of income, which is the application of the section 11. Then therefore, this fund misappropriation, maybe fraud, maybe that kind of things, we cannot deduct them. Then therefore, come to this one, expenses incurred in production of profit and income. In that, can we, it's this case law, Haley and Company Limited versus the Commission of Inland Revenue. Can we deduct outgoings under Inland Revenue Act number 24 of 2017? No. Information in pre-scene, it can be fraud, which is in the weak internal control, maybe lead to fraud risk. It can be this, if not, it's a repetition. And voluntary outgoing, it's a misappropriation of funds. If so, such expenses not incurred for the production of income of the company shall not be deductible. That is on the application of the case law. Not only that, we have 3 case laws relevant to the employment income and very rapidly tested in your paper, which is the Cribb versus Commission of Income Tax, other than versus the Commission of Income Tax, and the Kanaka Sabapati versus Commissioner General of Income Inland Revenue. Please go through these areas. It's directly linked to section 5. So subparagraph 1, which is inclusions to the employment income. These are that areas. Okay. Then on all tax perspectives, which is in the writing part, which I can see very, which is narrow manner this time it has given, but this more than enough. This more than enough. More than 50% of the syllabus is there. Then here, the other possible tax adjustment, before that, may I need to come for this one. Tax perspectives, statutory provisions on the Inland Revenue Act and the VAT Act. Don't forget these things. Then, if the case law can be tested through the assessment, if some current issue can be provided, the company has not filed the income tax return, blah, 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 and what is the situation? And there is a tax audit is going. Based on the tax audit, this expense has deducted by the company. The assistant commissioner's view is this cannot be deductible. Then analyze or evaluate whether assistant commissioner's argument is correct or wrong. Therefore, all these things are linked. Then you cannot avoid these things in the Inland Revenue Act or the VAT Act. Assessments, payment of tax, return filing, penalties, time bar, and the assessment. Sorry, appeal. Please go through these 6. Okay, you have to go through these 6. It is in your syllabus. Syllabus එකේ තියෙන කිසිම දෙයක් බලන්න නැතුව යන්න ඔයගලන්ට බෑ exam එකට. You cannot assume this can be test and this cannot be test. Then I can take it aside. එහෙම නෑ ළම. If there is a syllabus, it's a normally in the still 3 years. It's a balance. It's completely a balanced paper. Then in that, it's testing the relevant parts of the syllabus in a well manner where the students can answer. Okay. Then, therefore, please go through these areas. Any student can obtain any means the student who had particular hard working and commitment for the exam can get the 50 marks. Okay. Then, therefore, go through these areas. With that, I need to conclude the explanation of the writing part and the possible issues. Now, I need to come for the 30 marks tax computation. 30 marks resident company tax computation. The all possible adjustments based on the financial statements of the ELP. I have not taken separately the repetition to the OHL. It's the same adjustments can be come under OHL. Then I'm taking ELP, which is my main company, and elaborating this. Okay. Then start from the anyway. You have to start from the profit before tax. If no change in unseen, all figures are in millions. 28,874. Now I really want to go for your pre-seen document, and in that we will look at one by one. This is that in here, profit before tax, it is 28,874. That is this. And the share of profit, it's not the profit, it's loss. But I have used the profit because it's given as a share of profit from associate net of tax. It's a deduction, it's a loss. Then here, loss from associate, which is net of tax, shall not be deductible when computing business income. This is a loss which computed on accounting terms. Then therefore it should be disallowable. Disallowable means it is now it's a loss. It has deducted. It should be add back. Then here we have staff salary in one paragraph. I'm not going to which is on pre-seen. In here it's a one para. It has given the employees are there. Even the employees appointed by the international agents. It's working in Sri Lanka to take the international presence of the company. Then therefore, the APIT deduction on employment, on salary, if that particular APIT, relevant part of the APIT, if it has not deducted, then under section 10, subsection 2, it shall be disallowable. And next one, CSR expenses, based on the pre-seen information, I will take, but anyway, all CSR expenses, is it incurred for the production of income? No. Then it shall not be deductible when computing what? The business income. When it comes to assessable income, then we need to look at whether this is a qualifying payment covered under 5th schedule linked with the section 52. Now the thing is, in tracing information, the CSR activities, they are given the money utilized on CSR activities is for the cultural. They have cross-cultural employees, different cultures. Then to maintain that stability, connection, and they are using this CSR activities. Then based on the pre-seen information, for sure, there is nothing to compatible with the sections 52 and 5th schedule to the donation made to the government, donation to the institutionalized care for sick or needy or approved charity. But that part not given. But in suddenly it can be happen in the unseen. Okay, then CSR expenses not incurred to produce income and disallowed when computing business income. Based on praising information, the CSR expenses not satisfy the section 52 and 5th schedule requirements to apply as a qualifying payment. However, it can be changed in unseen. එහෙම change උනොත් කරුණා කරලා provisions apply කරලා ඒක deduct කරනවාද නැද්ද? What's the limit? Please look at that. Okay. Then R&D in SBUs, research and development expenses, it's given. If the criteria is under section 15 for R&D, we have to go for section 15 and we have to apply section 11.1 in that under section 15. And if the section 11.1, which is the production of income, it has incurred, we can deduct even the capital nature expenditure. Then therefore, for the research and development, in the section 15, we have industrial, scientific, the researchers, and to improve the product or the process, that kind of the researches, we can do it through the research institution through, or by, based on the particular types of the researchers, we can do it from the research institution or by ourselves. If those criteria are satisfied, then you can deduct the R&D expenses. Even capital nature expenditure you can deduct. It's permitted under section 15. Then for this one, which is the double deduction, it is not applicable now from 31st March 2023. It was abolished being 5 years completed. Then therefore don't apply double deduction. If this is R&D, it's already deducted from your PBT, then you have to look at for tax perspective, whether it satisfies the conditions. Then if so, then you don't have to do anything. Only thing, identify for the research process if there is a capital expenditure incurred. If it is a computer has brought purchase on the research process, only for research process, then other than giving capital allowances, we can charge it to the tax. It's as a deduction in the tax computation, we can take it. Okay, then no capital allowances if it is so. Then that is on the R&D. And next one on the financial statements, litigation expenses, because it's due to that weak internal controls, that paragraph, it was provided that fraud risk and the litigation risk is there. Then if there is a legal expenditure, then we need to look at what is the nature, why it has incurred, whether it's a production of income or not. Then based on that, you have to apply the section 11 and deduct, or not to deduct. Now what I am doing, that's on the income statement specimen things. And now I need to come for the financial position. In the financial position, we have PP&E. Then let me come to look at what are the adjustment of the PP&E. Property, plant and equipment. Common adjustments, capital allowances. If there is a disposal, we have to look at balancing allowance or assessable charge. If there is accounting profit, we have to remove it. Accounting loss, we have to add it back. And we have to provide capital allowances according to the 4th schedule and section 16. And what else? Nothing. Then for the opening capital allowances, we have to shall be, it's normally in the paper, it's given opening. The 22-23 tax computation, what it has claimed as the capital allowances, then in that you need to take that figure and you need to apply to basic condition that for the disposals, no capital allowances. Then therefore, in the last year of assessment, that disposals capital allowances also there. Then you have to deduct that the particular capital allowances to me to take the correct capital allowances for the year. And these right of use assets, it's only right given. Then therefore, the total finance cost, which is in the finance expense, we have to disallow. No capital allowances. If there is amortization for sure, it should be disallowed. And actual lease, not lease, actual rentals paid, which is within two components, which is interest and the particular rental on the ROU liability. Then in that, the capital on that ROU liability, then in that, the interest cost also deductible with the rental. Therefore, what it has charged to income statement, it should be disallowed. Okay, it should be disallowed. Then, this is on the ROU assets and the side of the liability, PP&E, right of use assets. Then next one is on the intangible assets. Sorry. Let me come to intangible assets. Next one, intangible asset, amortization of intangible asset disallowed. We have to provide capital allowances. When it comes to capital allowances, you need to look at what? The actual useful lifetime it has given, then you have to go for that. If it is not given for the indefinite intangible assets, what you have to do? You have to take the number of years given in your fourth schedule. What's that? 20 years. Okay, that is on the intangibles. Investments in associates, there may be impairments, there may be fair value adjustments. Then in the investment in associates, in any case, gain or loss or impairment or notional. Then based on that, you have to adjust. If there is a gain, it should not be taxed. If there is a loss, it shall not be deductible. And after that, financial asset, it's a fixed deposit, like that. I'll come to that later. DT, I'm not going to address because it's a provision. Then the inventories and trade and other receivables, the common adjustments, for this two, then here, inventories, possible adjustment is a provision and the write-off. Then inventory written off, it's allowable deduction, and the provision, it should be disallowed. And trade, trade and other receivable, possible adjustments, trade debtor written off. If the trade debtor written off, what you need to look at? You need to look at whether it has the particular legal actions were obtained or not. If the legal actions obtained, it's a allowable deduction. If not, it's a disallowed, because we need to look at substance of this trade receivable written off. And the provisions for bad or doubtful debts, any provision, it should be disallowed. There may be legal expenses incurred on bad debt recovery, then it has incurred to the production of income for the collecting of debtors. Then it is an allowable deduction. These are the core areas which, according to the given financial information from the side of the assets, for these things, I'm not going to take the financial assets again for this part. Prepayment is nothing much. Now we have liabilities side. Then before liabilities side, now let me start with the balance part, which on the other financial assets, which is in the current and non-current assets book. Then here the possible adjustment, we may have treasury bills, we may have fixed deposits, then in that, or any other investments. Then treasury bill or bond investment, which I have explained earlier, no withholding tax or AIT application. Then we need to go for the 30% tax rate, which is investment income. The FD, it has explained, I'm not going to take time. Investment in listed shares, which is we may have the dividends, then it has explained. And when it comes to disposal of listed shares, which is in the other income, that disposal part, then it exempted from the income tax, but it may be included in your other income. In the other income, then it's in your PBT. You have to remove it from the profit before tax. And after that, you have to take it under investment income, but in the exempted part, not the liable part. Okay. Then next one. Now I'm starting from the other possible common tax adjustment. Now, we had that the specific adjustment as the financial statements. Then I need to count for this normal or common adjustments. Give me 1 minute. And these are the other possible common adjustment which are, if you have done past papers, you can see all these adjustments. But for this one, I have again, which is get linked these things. Then other income may be included. For example, dividend income explained, rent income. It has explained, but I need to take this into the scenario. Then here, which here, as per information provided in, it's not unseen, it's pre-seen, then vehicle warehouse, which is on world-class status, rent income may be in unseen. Then it is so, it is not an investment income, it's a part of your business income, which is warehouses, it's a depreciable asset, and even vehicle fleet is my depreciable asset. Then renting of the depreciable asset, it is part of the business income, it's not the investment income. Then this is that earlier explanation which I have given. And disposal of PPE removed from the business income, loss should be added, those explain. And the next one, which is the, again in the other income, we may, which is fine, the fine may be disposal of shares. And it's removed from the business income, it's an investment asset, capital gain under investment income, exempted or liable, because exempted if it is a listed, liable if it is a private equity shares, correctly we have to apply. Then exchange gains and losses. When it comes to exchange gains and losses, we have two. One is the transaction, other one is a translation. Then translation may be your foreign currency fixed deposits, maybe your foreign currency bank accounts, maybe your foreign debtor, creditor. Then those translation to the 31st March 2024, it's a total unrealized part. Then that unrealized exchange gain or losses, it's not be taxed. Gain, it shall not be taxed. Loss, it shall not be deductible. And when it comes to realized part, it's a part and partial through the business, the settlement of the debtor, foreign debtor, settlement of the foreign creditor. Then like that, the typical examples. Then here, in that context, then it's a realized, the realized gains are taxable, realized gains are taxable, realized losses are deductible. That is in here. And for this one, we have, which is the exchange gain losses, we have a circular, which is a guideline, which it has given how we deduct or how we disallow. Then, next thing is on expenses. I'm very quickly go through these things because you're all familiarized with these things. Accounting loss on disposal added back, accounting depreciation added back, amortization added back, doubtful debt provision, it should be disallowed, bad debt written off if relevant legal action taken allowable, employment benefits, If it is less than fair market value, if it has considered under section 197, this is what? This is a domestic expenditure. That domestic expenditure part shall be disallowed. And the written off of the amount of related parties, if it is there, it should be disallowable. However, in pre-seen, no information provided, and this is general application. On related party transactions, other than that, it's not actually, it's a, there's not a group since no a subsidiary, then in the company we have to show the associated share proportionate. Then other than that, nothing in the related party it has mentioned in the account. But anyway, if there is a written off, then it should not be deductible. And next one, impairment of trade debtor disallowed, fair value gains losses explained, finance cost. The finance cost, check the application of section 12, accordingly apply the section 18. We have to go for the application of section 12. If it is incurred, if the borrowing is utilized to incur to the production of income, and next one, if the borrowing is used to acquire an asset and the asset used for the production of income, then of course, it can be deducted subject to limitation of the share capital plus reserves into 4 times, but other than the revaluation reserve. This is explained in next slide. Then be patient for that little bit. Then the improvements, which is in section 14, it's every paper it has tested. Then why don't you, which is Patrice, these things, the improvement on the depreciable asset based on the classes of the asset. Class 4, which is building 20, which is it's given. The 20 years, it's given for the 5%. And for all other assets, it's given 20%. We need to take the previous year's tax written down value. And on that, we have to apply. And if the tax written down value of the previous year, if it is 0, we have to divide the improvement expenditure on number of years is 12 and 3 given based on the classes of the asset. That provision you have to remember. And the marketing and communication expenditure, that particular gazettes and everything, it was abolished in 22-23 year of assessment. Now we have to strictly go with the section 15A only. Then if that criteria satisfy, you can deduct. And the R&D expenses, which it has explained, I'm not taking the time on that again. And this is the finance cost. Finance cost adjustment under section 12 and 18, according to maximum borrowing limit, as per the financial statements, these details were analyzed. Then stated capital plus reserves, it's 4 times other than revaluation reserve. In our case, we don't have revaluation reserve, but there is a reserve. Then is this a revaluation reserve or not? I don't know. I have taken this as a common capital reserve because it has not named as the revaluation reserves. Then I have taken this as there are capital reserves now. Then on general reserves, then in that point I have taken these. But at the exam, if it is given, this is not a general reserve, it's the revaluation reserve, then you have to only take this 2. Anyway, it's in the more than 4, the 4 times is a huge than the actual, this particular borrowings, okay? This one, and even in the non-current asset, non-current liabilities and the current liabilities, it is there with lease payable. Then here, it's a 5,000 million and 15,250 million and the 61,939 million. Then it's at 4 times, then it's a 328,756 million, a big amount. And actual borrowing as to financial position other than lease liability under ROU, that is assumption, because ROU we have to disallow. Then non-current liability, it's a maybe in the unseen the details will be provided. It's normal, it's given on what is ROU component. And however, for this one, anyway, if the section 12 conditions are satisfied, then totally finance cost is allowable deduction. See the note. Then here, this is non-current liabilities, interest bearing borrowings list, with lease payable. Current liabilities, interest bearing borrowing with lease payable. This one, actual borrowing total comes to this. Note, according to preceding information, if section 12 satisfied, interest cost other than interest from ROU, then can be deductible since the actual borrowing less than the maximum borrowing. You can see 31 to 328 millions. Then we are in the good position to take more borrowings. Then reserves, it assume it is not revaluation reserve. All are assumed. Then therefore, which is in unseen, if it is given, this is revaluation reserve. Don't take this in your mind and apply anyway. Eka avat, we are in a good position, which is my actual borrowings are lower. My maximum borrowing limit is higher. Okay. Then the next, this is again put as your eye open. I'm not going to do this, which is same theoretical part in the section 10 subsection 2. Single transaction, per day transaction, which is aggregate of rupees 500,000 no more. Then it shall not be transacted by way of the money. If it is so, it is disallowed. This one, very latest, the applicable year of assessment is the 23-24. Then please go through this. And even last time it has not tested. Then ඒක test කරනවාම නෙමෙයි. මේවා දැනගෙන යන්න, these are the latest amendments to that, and practically we are highly using. And the next one, which is the retirement benefit obligation. Retirement benefit obligation provision should be disallowed. Payment is an allowable deduction. Then in the question, we have opening, we have closing, we have actuarial gain. Provision not given. If one given, we can calculate the payment, but normally in the papers, it's given. Provision also given, payment also given. But in any case, I have given this one because we have the information to compute this. Then finally, finance income and all these things I have explained, but savings interest is effectively connected to the business. Then it's a part of the business income, but it's subject to 5% WHT. You have to take the tax credit. Okay. This is the next, which I have, which is emphasizing. You have 100% of the syllabus, then you have to go with your syllabus. Then therefore, please go through these areas also before your examination. Okay. And next, good luck and wish all the very best for your examination. Don't worry, I'm not stopping. There are questions. I need to come for the questions. Okay. Now, this is the end of the discussion of your phrasing. As much as possible, what I can see, it analyzed for you. Then, but don't, which is go with the open mind and go with your entire syllabus. Do pass papers. It's compulsory. It's a critical success factor for you to pass your examination. Do pass papers, have your theory knowledge and the practically application to the question, that application knowledge in a well manner, and then apply it to within 3 hours and 15 minutes. Okay. Let me stop share this one. If it is need, I will take. Then I really need to come for the questions asked. Sorry, Dano, because in the slideshow mode, I need to point out, I need to change, I need to highlight. Then for those 8 things, I cannot do. That's why it's a sides separately. It's without slideshow mode, it has been, because I'm doing a typing, highlighting and things in there. Then that's why it has taken. Then can we get this slide? Yes, sure. This presentation, after this one, I will email, then you will receive this. can someone share the presentation? I will share, not now, I will give it to the institute, then they will share, upload this to YouTube. We are at office right now, okay, they will do. Can we get PowerPoint? Yes. Can we get document? Miss, of course. Can you explain a little bit about the single transaction provision, okay? In the section 10 subsection 2A, that is the provision which is in 2023 Amendment Act, which is in September Act, it was implemented. Then what it has mentioned, we can do the transactions. Normally we are doing transactions with our suppliers. Then we need to purchase assets. Then we have to make the settlements. For my consultations, lawyers, secretaries, we have to make the payment. On this situation, the Inland Revenue Act has given the particular modes of the payments. What are the modes of the payments? You can do the payments through debit cards, credit cards, online transfers, account pay only check. Do you need to share that document and explain? Then, which is the account pay only check. On these things, you can do the transactions. But what is the prohibition, Lamai? The prohibition is you cannot do that particular transactions by way of the cash. Now, for cash, there is a limitation given. The limitation is aggregate amounts per day or a single transaction. The aggregate amount is the rupees 500,000 no more. Where it was at? Rupees 500,000 no more. This is the which I have explained. These are the things. Then it's given for per day or single transaction. Now take this example. I will take the single transaction situation. Then you need to purchase the 5 computers for your company. Okay, 5 computers for your company. Now you are going for the computer, which is, if it is Unity Plaza, you are going there. For name of the company, you are purchasing 5 computers. One computer is 250,000. Now for the 5 computers, it's 1,250,000. You are paying through cash. That is a single transaction. එක transaction එකක් ලක්ෂ 5 ඉක්මවනවා. Now, in that thing, what's the drawback to you? For the purpose of accounting, yes, it's my computers, it's my property, plant and equipment, then I can identify. For the tax, it's not considered as an asset for the tax perspective. What's the drawback? I cannot claim capital allowances. The next scenario is a per day. Then I need for my company, I need for rupees 1 million for daily expenses. I'm writing a cash check. I'm writing a cash check and I'm taking that money 1 million and I'm paying into my company secretary, the lawyer, for my supplier, and I'm paying. Now the question is, it's a cash check and a cash, it's the same. Then therefore, the check, if it is we are withdrawing the check, it should be what? It should be the account pay only check. Then I have taken 1 million out and I have done this and that expenditure. Now what is happening? That is aggregate amount, aggregate total. It's 500,000 no more. Then that particular expenditure, what I have done, from that, it shall not be deductible. It shall not be deductible up to the level it's exceeding that the 500,000 no above. Okay. Then here, this is a provision. Please read that. I have in a nutshell, I have explained the thing. And this one, but this provision is not applicable for these payments. Now, obviously, no, because in the IRD for the Commissioner General of Income Tax, for the Commissioner General of Inland Revenue, for the income tax, we cannot use the checks anyway. We have to make the payment in cash or online transfers. Then for the VAT, it's all applicable almost. In here, the provision of above para shall not applicable to the payment to the government on the financial institutions for the particular classes of persons or the prescribed by the minister. For that part, this one, it has still, there is no gazette for this. Then under this limitation is not applicable. Now it's given the what's the meaning of the single transaction, the means of purchase or procurement of any goods or services on a single invoice. And which is the next one. This is a single transaction. Then on computers, it's a single transaction. And when it comes to the per day, that particularly 1 million odd thing you can take. That is on the application of the section 10 subsection 2A. Now again, let me come to this. What? And can you predict whether VAT on financial shall be tested? Now, VAT on financial services may be in your paper, may not. Then I cannot tell, but in according to my gut feel, when analyzing the up to all the papers from 4 or 5 consecutive papers that on FS has not tested. Then please take your time, take 2 hours, more than enough, and look at the Vadon FS Gazette and look at how to compute with the SSCL. The Gazette has changed. There is a new FWAD Gazette is there. Then please go through. It can be tested. There is a high probability of testing, but I don't know. But when analyzing the past, it is the pastly what it has tested. Yes, it has not tested from the recently. Then therefore, obviously there is a opportunity for test. Then I miss, in any case, will you be, yes, I will share, I will email this to the institute, then they will share with you for sure. And next one. Madam, is there any payment that apply final withholding pay? Yeah. For the section 88 and section 88A, which is on non-resident and international taxation, then if it is not derived through the permanent establishment, then everything is final. Then in the international the transactions, you have to go for double taxation treaty, if the treaty available, and you have to apply the rates given in the treaty. If not, you have to go for particularly section 84, section 85, and after that it will be linked to the first schedule, subparagraph 10. In that, the particular rates given for the services 14%, dividend 15%, and for interest 5%, that 2% which we have discussed. And for any other cases, it's a 14. Then like that, linked to section 73, which is on the source of payment, then there are on investment returns and the service income of the non-resident person, the AIT or withholding tax is application. And that particular withholding tax, if it has not derived through the permanent establishment, it can permanent establishment, එකකට ලැබිච්ච income එකක් නොවෙනවා නම්, if it is not received to the permanent establishment which is wholly or devotedly, then that other than it's received to other parties, then it is a final withholding payment. It's very clearly given. Therefore, it is there. Please go through your first question. For the 25 marks, it is on non-resident and international taxation. You have to do that question in a good manner for you to pass the examination. It's a compulsory you have to attempt. Then it makes confident of you whether that attempt, if it is the 100 marks allocated to the 3 questions. Then if you have missed 1 question, then your confidence level is going down. Then don't let it to be happen at the examination. Then please go through the non-resident and international taxation and do the past papers. If you have questions, please do those things. It's critical. Okay. Then again, when it comes to non-resident and international taxation, particularly the double taxation avoidance agreement relevant annexures given to you as the paper as a supplementary annexures it is given. Then before that, please go through at least one double taxation treaty and it's familiarized to your eyes. Okay, these are the articles for article which is permanent establishment, article 5, this is there, article 7 for business income, and like that, please go through at least one for you to have good one with your paper. And Puta, you can, this is on the Gazette notification on this question. Miss, can we take relevant Gazette notifications from here? Then you can take those Gazette notifications, take printouts, and it's in the Inland Revenue web portal. Then you can go to that ird.gov, that website, and in the downloads or publications. Downloads, we have the Gazette notifications. Downloads or publications, we have the Gazette notifications. Let me share the screen to you again. In IRD web portal, there is a downloads. In that, the Gazette notifications are there. In this, from the 2018, the Gazettes are applicable to you. Then you have the list of Gazette notifications it has published. Then you all can see now if I have taken the transfer pricing. Yeah, if I have taken transfer pricing.
Excuse Nananjali. Excuse Nananjali.
Yeah.
The same gazettes are available in the website also, CC Lanka website.
Oh, okay. Then
I have
now
the
you can hear, no? You can hear Mr. Arna said that, which is the all these relevant Gazette notifications are in CS Sri Lanka website. Then why don't you go for that website and you can
I will share that link. I will share that link.
Yeah. Then all the list already it has published. Then therefore it's a very good help for you all. Then the list of the Gazette notification relevant to you, it's published, and all the Gazette notifications are in the CS Sri Lanka website. Then you all can take the printouts and certify those before your examination. Okay? I think I have given your question that answer. And can we have the sections which always tested in the exam? Most important. It's all the how can I answer for this? There are in the Inland Revenue Act, the other than some parts, then some administrative provisions and some penalty provisions on the recovery actions and all other relevant parts are in your syllabus. Then particularly that sections is applicable for your examination. Now, let me summarize for your question. Let me summarize one part of your syllabus, which is the resident company taxation, which we have discussed. Then in that context, which is starting from section 10, 11, 12, 13, 14, 15, 16, 17, section 18, section 19, section 24, section 31, all these sections are applicable. And when it comes to business income, you have to look at section 6, employment income section 5, investment income section 7. Like that, I can tell all the sections in there. Then it's not commonly tested, Puta, because it is within the syllabus. Anything can be tested in a very balanced manner. Therefore, you have to have total idea of the your curriculum, your syllabus, main topics and the subtopics. Then therefore, don't go with the, which is the limited learning. Please go with the all the things within the syllabus you have to know. Then don't go for the selective learning and for your examination. Okay? Advice, and I have given one simple part of your answer. And Madam, a small concern regarding lease agreement entered after 1st April 2018. Interest and capital allowance can be claimed, but when it comes to ROU asset, according to the provisions, only lease payments are claimable other than the disallowed. Can you please clarify this point? Now, let me come to this one. Okay? Here, we have in the Inland Revenue Act, the finance leases are defined. But in the Inland Revenue Act, ROU has not defined. ROU we are applying due to the changing of the SLFRS, that particular accounting provisions, accounting standard, particular provision is charged to our financial statements, we are adjusting to the tax. When it comes to finance leases, in section 31 of the Act, it's considering as the blended loan and the definition of the finance lease and everything given properly. And in the definition of the depreciable asset, now I'm coming to first part of your answer, which is finance lease agreements, we can divide into two components. One component is the agreements entered prior to 1st April 2018, which is governed under Transitional Provision Gazette, which is under Act number 10 of 2006. A part test it's not it's not that not applicable. It's a limited application. Then I'm coming to this part, which is the lease agreement entered or no after 1st April 2018. Then it is totally governed with the section 16 and the 4th schedule of the Act. Then what is the link of the section 31 for this one? In section 31, this finance lease agreement, it has recognized not as the type of the asset. It has recognized as the way of financing to acquire the asset. Then it recognized in the Act it as the blended loan. Blended loan, we have two components. One is interest, other one is the capital. Then, way of borrowing, I have purchased an asset to use for what? Use for my business. Why I am using it for the business? For the production of income. Then, due to using production of income, what is happened to the asset? Due to wear and tear, obsolescence, value is going to be falling down. What is that definition? It is a depreciable asset. Being a depreciable asset, the lease agreement entered on no after 1st April 2018. If it is depreciable asset, it is subject to capital allowances. But traveling purpose motor vehicle, even it's a finance leased or freehold, then it is not eligible. Lands are not the depreciable asset. Those are capital assets, not eligible. That same basic criteria are there. Then, under that now, you can apply. This is a depreciable asset. We have given capital allowances. Now, we have borrowed for what? To acquire an asset which is used for the production of income. Can you apply section 12? Yes. Subject to what? Section 18. Then, very summarized manner for the lease, for the under leasing, finance leasing arrangement, if we have obtained an asset, if those criteria are satisfied, it's under section 12, it is eligible finance cost deduction subject to section 18. When it comes to ROU, right of use. Now, for instance, I have executed the agreement for the 10 years lease of the building. Now I have right for what? Use that building for how many period? 10 years. Is that my own asset? No. I can use it, but it's not my own asset. Then, being the asset is not belongs to me, Can I claim capital allowances? No. And in the finance lease, in the section 31, the definition of the finance lease is given. After the lease period, is the ultimately how we transfer to the owner. But in ROU, nothing mentioned in the act, but there is a one condition, method of accounting in section 20 and section 21. In the method of accounting, it's given we have to go with one, the generally accepted accounting principles which we are using. We have 3, now 4, SME, SLFRS is for SME, LKSs, SLFRS, and for the even small companies we have standards. That is the generally accepted accounting principles. That's why this ROU came into effect in our tax computation. Then in ROU, it's an asset which the right, only we have right. For that, we have to recognize on the accounting standard. We have to recognize in 16, we have to recognize as the asset and liability both. On liability, we have the finance cost. Asset, we have the amortization. Then both we cannot allow, no capital allowances. And on the renter, which we are settlement of the liability or rather actual utilization, it's interest component benefit also given and the capital, that is the deductible part on ROU. Okay, I think I have given total explanation for your question. Okay, then what is this? From Inland Revenue Act. That for your question. Then I have given enough sections from the Inland Revenue Act. Then any questions? Yes. When the mock paper exam for SJ3 and when the discussion will happen in what application for allowable and disallowable calculation is different from time to time. Can you explain it? This time the mock paper discussion is not there. You have last time paper. It's a covering same year of assessment 23-24 and the discussion of the answer is there. Please go through and mindful, please do the past papers. Then it is compulsory for you to, before go for examination, at least 3 past papers or more than that, please do and at least one. But please do the papers. And the VAT application for disallowable, VAT application for allowable and disallowable calculation is different from time to time. When it comes to disallowable component coming from the section 22(6) of the Act on the VAT, in that we need to apportion or directly we have to take input VAT which is not subject to the taxable activity. Then it's the main thing is the one is if there are exempted supplies, then we shall not deduct the input VAT relevant to the exempted supplies. That one. And the second one, if it is not directly connected to the taxable activity, for instance, the managing director's motor vehicle, the four tires we have changed and we have received the tax invoice, but we cannot claim them because it is not directly connected to my business. Then you have to understand, I'm highly recommending for you to go for section 22(6) provision. Then here we need to always look at one is a supply and you have to analyze your supplies. It's a normal taxable supplies, SVAT, zero rated supply, exempted supply, or which is not on, which is out of scope supplies. Then under that situation, always input VAT relevant to exempted or excluded supplies, directly or indirectly, we have 2 input VATs, which is the directly attributable and commonly attributable. Then both of that, if it is relevant to that exempted supply or excluded supplies, you have to disallow. That's the one thing. Second one, the input VAT it has given not connected to the taxable activity, like it has mentioned that managing director's motor vehicle. If I have imported materials from that, my personal use, I have taken the rupees 1 million on material, the values. Then like that, you have to first identify what is the link to this input work on supply. The basic, the foundation on that. Then accordingly, you have to allow or disallow, you have to decide. Okay? That is on your question. It's not different time to time. As far as you know the basic application, then you can do it like it explained. Please go through section 22.6, that disallowable input, what how it taken. Please apply it to the questions and look at the past papers, not do the past papers. Then if there are any questions, you all can clarify. Then, madam, at least how many past papers should be added? I have mentioned as much as possible you all can do, but at least before the exam, you have to do at least a one. Do mean not look at the paper and not look at the solution. You being the student, you have to time it and you have to do. Then that's the one. If not, at least 3 or 4. Minimum 3. It's better if you have done, because minimum 3 is the 3 questions. It's a 9. In one question, there are at least 4 sub-questions. Then it's at least it's a 9 into 4, at least 36 questions you have done. Then in the company tax, if so, you have familiarized with the 3 questions. At least you have to do 1 past paper, at least, but you have to do more. Then next, this is a link it has shared on the in here, which is on the Gazette notifications. Madam, can you give some tips to manage a section 2 question? Like tips for time management. For time management, anyway, for your company taxation, the computation part, it's only 54 minutes. 54 minutes. It is the criminal offense if you have taken more. Then, if you are familiarized with the calculations, then what? If you like for that, then what you are doing, take more time of that. Then always keep in your head, this is not for the 6 hours, this is for 3 hours and reading time is 50. Then you all can take the maximum benefit out of the reading time. Now, Lamai, when you are sitting for exam, you all know all 3 questions are compulsory. Then if it being a compulsory, what you have to do, if I am a student, I can read the question paper and I can tick one question which is first question for me to attempt. Other than that, I cannot select, this is the question I am not going to do, this is the question most favorable. No. All 3 questions anyhow you have to do. Then therefore, take the maximum benefit out of the reading time. Once in the reading time, you can read the requirements of the examiner, you can analyze the question into subparts, then you can read the facts given in the question paper for that question. And when the answer booklet is with you, then you can start your answer writing. Then it's critical. And always, now once the paper is issued, if I'm a student in that period, what I am doing in the question what I'm writing in big letters, what is the minutes I can allocate? And I'm writing the time and the marks. And even question 2, even question 3, then always it's coming. If I have only done this one, it's 25, I'm going to fail. That's the message. Very serious message at the examination. Then therefore, it's your self-control, your self-awareness on what you are doing. Then therefore, even I have mentioned this 100 times of this. If you have not practiced that, that's a question. That's why the practice with the questions are very critical. Okay. Then all relevant, which is the part on the Gazette notifications, everything given. then it's really helpful for you all. Take the all benefits from the institute and for your knowledge and for your lecturers, and you have to pass your examination with it's a 50 for the tolerable errors. There is a 50. Then you can do. And where can we show the for this one? Okay, thank you. And the IRD Act, which was buy from government presses, allowed to bring. Yeah. It is allowed to bring with the amendments in the VAT also. The what you have purchased from the press, yes, you all can bring. And ma'am, where can we show the payment made by a company under SLCA? Ma'am, where can we show the payment made by a company under SSCL in Patrica? Is it coming under sales? Is the question. It is coming under sales. Yeah, now the two things. This student is asking on the application of the turnover tax, which is the SSCL in the financial statements. Now, in the SSCL, it's a 2.5%, it's a commonly, and based on the relevant turnover types, it can be not the rate can be changed, but the liable turnover, it may be 50%, it may be 25%, it may be 85% being the manufacturer, likewise, it can be changed. Then, it's accounting treatment on the SSCL, then if you can collect it through your invoice, because at the guidance on them, you can pass the effect to the customer and collect. If it is collecting, your revenue is 102.5. Then it's your part of the revenue. Then, and it's a part of it's a revenue credit and the credit and everything is there. And then you need to take it out. Or one thing you can show it's a deduct in less SSCL and you can deduct it from the revenue, or else you can put it in the selling and distribution expenses, or else admin, wherever it can be in the presentation, and the SSCL payable part separately and payable getting minus in this month payment you have to make on or before the 20th day of the next month. Then you have to the payable amount other than the last payable one. Then if it is a March one, it will be settled on the 20th April. Then it is in the payables. All other, if you have done the timely payments, then it is settled. And which is the SSCL particular expenditure, it is in the P&L, which is an allowable deduction. It's a turnover tax which we have collected and we are subsequently paying. Okay. Then it is the entry, it is coming, which is it's included in the revenue, and it's the first thing. Secondly is the SSCL expense debit, SSCL payable credit. And after that, SSCL payable debit and the bank credit, likewise, it's going. And hello, miss. Is there any facility from the CA to get myself familiarized with the online exam platform? First time attempt to the exam from overseas. Actually, I don't have any answer for this one. I will leave these for the online exam platform. I don't know about that because actually I don't have any information on this. I'm really sorry. I don't have any information on this to the pass to you. I'm sorry. Then, madam, if what paid is given, as expense, it is not allowable to deduct. Yes. Can you explain the reason for that? Because in the section 10, which is a disallowable expenses, section 10, it's very clearly given any tax charged to the any tax charged to the income statement, it shall not be allowable to deduct. Then here on the VAT, why it's charged to the income statement? Since it is irrecoverable for any reason. Now, for instance, for the traveling purpose motor vehicle, if you are claiming if there is a VAT component, then it cannot be claimed against your output VAT, being a normal company. Then anyway, it is coming to the if it is not separately, it's under reduction of the liability, if it is not recorded, then it is coming to income statement. Then it's a particular tax which we pay to the government, it shall be charged. Then it's not production of income. Then it is not allocated to any business connection, any business activity. And under section 10, it's clearly given any tax charged to the income statement under this act, it's an Inland Revenue Act there. And again, any tax prescribed, it is disallowed. And finally, which is under section 11, subsection 1, that expenditure is not incurred for the production of income. That's the reason. And next one, madam, means to know anything change happen during this time. One of the example for personal relief amount, remittance tax rates also the same. Yeah, in this time also testing the year of assessment 23-24, then what we have discussed is everything, it is samely applicable. Then you are asking on if no change for the June 2024 examination, the tested year of assessment is the 23-24, the same year of assessment testing for this time. Then one of the examples for the personal relief, it's a 1.2 million. Remittance tax, it's for you're asking on the remitting of the profit 14%. Tax rates I have explained, yes. Previously in June 2024, in December 2023, it has tested the year of assessment 22-23. It's different, completely different for the 6 years apportion like that. Previously, I am taking the latest paper, June 2024. Madam, will this session recording? I think yes. Then, can you briefly explain how to use publications during the examinations? And for you to use the publications during the examination, the gazettes, then you have to read it before your examination. That's the one thing. Now, if I have taken the SWAT Gazette notification, I'm taking simple example. In the SWAT Gazette notification, if the examiner asks what are the forms to be submitted by the RIS and RIP, you can go through the Gazette and you can write. And again, in the SWAT Gazette notification, if it asks what are the situations that RIP can claim the input VAT and take the refund, you can go for the Gazette and check. And when it comes to transfer pricing Gazette notification, when you are writing the answer on the associated person, you can take that. And again, on the regulation 1, when the transfer pricing is applicable, you can write. And to do all these things, you should be familiarized with the Gazette. Okay? Then it's on the publications. And I think that particular student question, Ms. Anura has answered with on the exam and all, it will be explained, it has given. Then, yes, you will be get in touch with this. And, madam, do we need to write the exact of the act when we answer in the question? Can't we directly apply the IRST provisions to the scenario and write? Yeah, you can apply the provision and write the answer. Eka tamai daruwa metana need to write the no. You need not to write the theory and theory thing if it is not relevant. But when it comes to the application of the what we have discussed, section 10, subsection 2A, if it has given, then you have to identify this as a single or per day transaction. And you have to identify its aggregate amount or single amount. It's 500,000 or above. For that, you have to write as per section 10, subsection 2A. If the transactions are done in this manner, it's eligible. But if it has done in the cash, it's not deductible. Then this is the reason. Accordingly, then you have to apply. Then it's just like that which is the bread and butter. Then without provision, you cannot apply. Without application, you are not getting marks. Act provision taking the provisions of that, okay, everything is done. No, you have to apply it to the given scenario. Then to apply, always you should know the relevant provision. For the it's a border provision word, we cannot apply it that. No. Then therefore you have to know the correct provision and you have to apply. Then can we directly apply? Then you are asking as per provision of section 10, single law. Anyway, you have to write some words in the provision. This is a technical, that means this is a law which we are applying. Then you have to show the examiner, okay, I know the law. Then will the examiner deduct marks if we write like that? Why I'm asking? This is when we write provisions and again apply. So time consuming. Then you have to manage your time. You have to mention the relevant section at least one sentence, at least, because you have to apply that provision. Then to apply that provision, you have to write the gravity of that. Then will examiner deduct marks? Actually, I don't know. Then it's your responsibility to show your colors at the exam and get marks from the examiner. Okay. Then what next? Then APIT. Yes. APIT. What's the double entry? APIT is not a which is in the if the employer has incurred. Yes, it is coming to the P&L. If not, APIT, it's going from the salary control account. It's a deduction. Then it's a net worth which is coming to employee. It is going after deducting of the APIT. It's nevertheless, it's not coming to the income statement. If it is coming to the income statement, if the employer bears the APIT cost of the employee, it's a tax on tax application, it is coming. Okay. Madam, can we bring a copy of pre-scene analysis with simplified notes, right? No. Pre-scene is attached to your paper. Then why are you bringing on that? Because pre-scene is attached to your paper. Now for the 6 weeks of time, pre-scene is with you all. And please read and you have to take the things in your mind. And I'm pretty sure with the paper, pre-scene is attached to the paper. Then don't worry about the pre-scene. And you have to worry about your unseen based on the pre-scene. You have to familiarize with the pre-scene as much as possible before your examination for all 4 subjects. Any questions? I think I have answered for all. Okay. Then any questions? I think no. I think I can happily say good night to you all. Then this PPT I will share to the relevant parties. Then they will share with you all. And please go through entire syllabus and be ready for your examination. It's 3 hours and 15 minutes. You have to manage your time. You have to, which is attempt 100% of the paper for you to pass the examination. Then it is as a prerequisite, you have to go for the past papers. Kindly read the examiner's comments also. Then it's adding value to you. How, as a student, how you are going to write answers and what are the previous students, what they have done, weak points, what they have done, the good points, how it relates to me. Then at least for the June 2024 paper, please look at the examiner's comment. It's again a value adding to you. And this is all which there are some messages again. Okay. Then that's all, and wish you all the very best for your examination. And which is thank you for Sri Lanka having this webinar, and I think all of you are benefited out of this. And I will wind up the session with the good thoughts, which is all of you all successfully complete the SL3 paper. Okay, thank you very much. Ms. Arnold, thank you for the support. and which is
Thank you very much.
Gazette notifications. Be prepared. Give a 1 minute. Gazette notifications, VAT, Inland Revenue VAT, all open book referential materials. Please keep it, y'all. Don't be panic at the very close to the examination. Okay. Let me wind up the session. Thank you for all of y'all for the interactive, which is interactive with me while the session, asking more questions and getting clarifications. Wish all the very best for your examinations. Good night for all of y'all.